Hey everybody, it's Pete. Welcome to Stock Trading Pro. Hope you're having an awesome day. In today's episode of the best stocks to buy now, we're going to do a sector rotation, a deep dive into all of the money flowing in and out of different sectors. We're going to review all 11 of the main sectors, but we're going to break down 3 bullish sectors, 2 bearish sectors. So we have a list of the best stocks to buy now and some ideas to be short selling. If you happen to be new to the channel and this stuff is interesting, at least we're helping you. Do me a favor, make sure you hit subscribe so you get updates just like this video every weekend. And make sure you join us for our live stream, which is every Monday, Wednesday, and Friday, 7:30 a.m. Eastern Time. We probably review about 25 different stocks to consider to be the best stock picks heading into this week. The one thing I want to talk about, though, is something called the bullish echo. You're going to see a couple of stocks, especially on the healthcare side of things, that are clearly bullish, but have beyond the optimal entry. So they're not quite a new swing trade at that point, but would qualify as a pretty good day trade. So enjoy the video. Leave a comment below the video if you have any questions about anything that we discuss here. If you get some value, do me a favor, smash that like button. I would really appreciate it. Plus, it'll let me know that you like this kind of stuff. It's roughly 20 minutes, but we cover everything from soup to nuts. Hopefully, it'll give you a nice heads up on what to expect next week. At the very least, what to game plan for on Monday. And if you haven't done so already, below this video, you'll also find a link to download Smart Money Footprints, which is our #1 guide for understanding order flow and the 4 stages of price action. So enjoy the video. Let me know if you have any comments. Leave them below the video and have an awesome day. Thank you. Hey, it's Pete. It's Saturday afternoon. We're going to be creating a recap and looking forward on sector rotation heading into the week of April 11th. 2022. Hopefully this gives you some structure for heading into the week. Just want to recap what happened the last 5 days and how that influences going into next week. We had quite a few obvious opportunities here. Energy wasn't obvious during the week. We drew this gigantic pennant pattern on Chevron here, which you could take a look at. Let me actually pull this into the daily chart. And you see it was actually just a question of when it was going to break out. Finally did. 2 really awesome days. So energy kind of perked up on Thursday and Friday. But a little bit deceiving. It looks like it was one of the pockets of opportunity for the entire week. This is the last 5 days. It really wasn't. It was just those 2 days, but it was pleasant. That's for sure. But what you can see here is the only thing that's really green here, maybe 1 or 2 opportunities down here in consumer staples, we'll call it. Utilities, healthcare, absolutely on fire this week. And the inverse ETF. So we're actually going to break all these down. Hopefully we'll give you a setup for heading into next week. If you remember last week coming into this week, we actually were looking at the metals and miners, and they did not necessarily disappoint, but they didn't exactly explode either. So we're going to actually break this down. We're going to actually go sector by sector for what happened on Friday, and then we're going to translate that into how the week is unfolding. So we're actually going to start out here with the rotation heading into Monday. So as we just said, healthcare on top of the list, consumer defensive, Costco and Walmart just absolutely on fire last week. If you didn't happen to see it, Pepsi caught a bit as well. Energy, as we said, the last couple of days of the week. The other side of the equation, we're actually going to be looking for short sale opportunities in technology and consumer cyclical. We did have some short sales in financials this week, but now they're a little bit beyond the optimal entry, and you can see here they actually bounced a little bit. So this was, I think, 7 days in a row. Thursday caught a little bit of a bid, so they're not on the list heading into Monday because now they formed what we call a swing low. Swing low is usually a momentum on back in the other direction. So this push down here where it was well offered that entire window, you can probably see it a little bit cleaner here. Bearish U-turn into 1, 2, 3, 4, 5, 6, 7 days in a row. Obviously, that means well beyond the optimal entry. So despite the fact that they were one of the weaker sectors last week, they're not heading into the list for Monday. But what is heading into the list for Monday, as we said, technology, consumer cyclical. So what we're going to do right now, we're going to break down the week of the leading groups for last week, and then we're going to break down some individual ideas in this list right here. So we're actually going to start here from a percentage gain last week. OIH, again, as we said, some of the oil services stocks caught a bid. The weekly chart not really looking amazing. We have 2 weeks of melted candles, which is exactly what we saw. Actually, longer time frame here. but the XLE finally did catch a bid. It went well offered, well bid on the weekly chart and exploded bullish inside candlestick, bullish U-turn into energy candlestick into a breakout. So we are looking to see some follow through here. As we said, the gold and metals and miners did not necessarily perform that awesome this week. And you can see this is Thursday and Friday, but the rest of the week was pretty much nothing. If we actually get in here and draw what we normally do, which is the opening for the week, you can see basically we formed it was nice that we closed near the highs, but not much from a swing trade perspective. But now that we're resting on the breakout level, we are actually looking to put on some new trades. So in that area, we'll be looking at AEM and NEM probably to be leading the pack, probably AEM at the top of the pack. One that I want to point out, we haven't been talking about basic materials that much, but I actually want to bring in the 50-period moving average here. Let me just actually fix that. I want to turn this one into the 50. Alcoa, and let me actually bring in both of these. I'm going to bring in the 50, and I'm going to bring in the 20 because it was clinging, and we had a lot of newer members saying, "Oh, it's holding support. It's holding support." Once, twice, yeah, it was. But prior to that, 1, 2, 3, 4, 5, 6, 7 red candles, 6 red candles prior to it breaking down, and now it's actually an inside candlestick looking for another breakdown. So my point is you have to start to read in between the lines, which is one of the reasons that I prefer to look at the price action without any kind of indicators, because I want to see the raw data, the raw price action. So as strong as Alcoa was for this period of time, you actually have a 1, 2, 3 top going on here on the daily chart. And now the weekly chart following this bullish gap is now well offered for 2 weeks in a row with lower highs and lower lows. So we are looking for this to punch lower. All right. Just wanted to make sure I put that out there. Agricultural stocks, a little bit of a bid, very similar to metals and miners. Really impressive that it closed at the breakout level. And when you zoom this out even a little bit further, you can see that we're actually resting right at all-time highs. We're going to get into that in a little bit more detail in a second in the consumer staples area. Financials we just covered, reversal, and one of the members of our community, David Farris, brought up a good point. Now that the yield curve has changed a little bit, we might see these stocks in play in a bullish manner right now. So jot that down. This might have been the end of the selling there. We'll see. We'll see how the week unfolds. What we're looking for is this kind of a week here where we open up and we stay above the opening price for the week. So wherever we end up opening here next week, we get a green candle, we could lean into them. We get questions all the time about which stocks are the easiest to trade. And quite honestly, I find the financials easy when they're in play. If they're not in play, they're a total mess. They're not even worth it. But if they start to catch a bid now with the market environment changing a little bit, they will be on the radar. XLB was one of the strongest you can see here for several weeks, and now 2 weeks of melted candles. You can make an argument that this is a bull flag, but man, it is a sloppy one. So nothing for me to do really right now. We got 2 melted candles here. I want to see this get above 90 and then see some of the market leaders catch a bid. This is really where the money's been for the last, almost 4 weeks. Well bid once, twice, 3, 4 times well bid. Now the question here is, can it stay above this level? Can it maintain breaking out of this box, which you can see here? You can see how hard we work this thing. And now it's above that level. Let's take this out just a little bit further. And again, you can see all-time highs here. So XLV should be on your radar. I'm going to break down some stocks in the XLV for you in a minute as well. Retail, not much going on. You can really say that this is kind of a 50% retracement from this move here. So really not much going on. Maybe if it breaks here and goes well bid on the week, we can find some opportunities. It does have some room to go. This is really one of the areas talking about consumer staples. Again, 4 strong weeks in a row, just a ferocious move to the upside. We're going to take a look at a few stocks in that group as well. On the other side of the tape, again, semiconductors taking a hit, NASDAQ taking a hit, but you can see semiconductors are actually leading the way down. They are well offered. You got a bearish U-turn here, followed by well offered, and then you have a support level here right around this 245, 246 area. If we can get through there, it's got a lot of room to go down to the downside. So the Q is the XLK, again, the technology area, and the XLY, consumer discretionary. So we're going to break those down. We're going to look at the strongest groups, and we're going to look at the weakest groups. So this is actually over the last 5 days. I'll give you a little bit of a different picture over the last month. Over the month is pretty good, but we're still that last month. This is really 22 days of trading, and that's because of the bounce off of the FOMC. So we're going to do now is we're going to bounce over into rotation here and get a little bit of a deeper dive into this list. So we're actually going to start out with what's at the top of the list right now, which is healthcare, and pop some ideas into healthcare and some of the ideas that we've been watching all week. So ABBV, the stock, you can see from probably 8 weeks in a row now, still solid. This pause right here, one of the best pauses that we've had in a while, other than the first one, which was this one. This pause right here went into a bullish U-turn, amazing reversal pattern, and you can see the weekly chart really hasn't looked back. The challenge that you're going to have now with these stocks is they're a little bit beyond the optimal entry. You can see the last move here in ABBV, 146 and change to 160. So roughly $15 here, and 162 to 170. So this really doesn't have a lot of meat left on the bone as far as a new swing trade. So we're going to be more inclined to maybe have this be a bullish echo and then wait for a 2 or 3 day pause until we take off. But it's more important to have the stocks on your radar. Pfizer blasted through this resistance level, and look at the volume in Pfizer here, just to give you an idea of what's going on. Volume expanded pretty good. Friday was a little bit lower. It needed the pause, quite honestly. If you didn't happen to see the price action on this during the day, from a day trading perspective on Thursday specifically, it was a rock. Actually, the strongest stock on the board that I had for Thursday's trading. And I was involved in that one on Thursday. Comfortably pausing here now. So this one actually, now that it's paused today, maybe one more day of a pause. If we see lighter volume, we'll see if we can make a run up towards that 62 area. So going through, again, we're giving you some ideas here in healthcare. We're going to start there. We're going to work our way through the list. So Pfizer, UNH, again, pretty far beyond the optimal entry, but you need to know the list because you need to create a tracking journal. Now, what's different here about Lilly is we paused for about a week and a half, rally, and now paused again. So you can make a case that this is an optimal entry, but because of how far it is from the breakout level, this would only be half shares for me. But order flow, absolutely still strong there. MRVI, again, this is a different situation. It did not take off. We got a giant bullish engulfing candlestick, which is a strong reversal pattern. And 43 here, you can see, is the pretty obvious level. So we don't have a lot of room to go. They've got maybe $5 depending on where it opens. I don't like the fact that it closed off the low. So if we work our way through those, the top three that I gave you, ABBV, Pfizer, and UNH, would be the ones that I'd be looking at the most there. Maybe even J&J, which was pretty strong. And now you see got a 2 day pause here. So that's actually really what we're looking for before we start to get involved. So that is the list of stocks here. In healthcare, we're going to drop down now into consumer defensive and take a look at some ideas over here. First, I'm going to start out as one that actually had a pretty good week, but rested right at a breakout level and finally had a bullish gap. And we've been talking about this. Again, giant bullish engulfing candlestick that took out the last 5 weeks. Plenty of room to go if it can get through this 225 level. But here's the thing. You have to notice these things. Bullish gap, closed above the open, right at resistance. I like this idea. This is going to be a 2-step trade. Look at that room to go there. Now, again, you can make an argument that this is far from the optimal entry, which it is, but you can't ignore these 2 bullish gaps. So this would be a 2-step trade. First step on the first entry. Very similar to, see, Dollar General, DG, again, beyond the optimal entry, which just sounds crazy. The larger cap tech stocks have so much publicity, but look at this move list. We cleared some really big, significant levels. Let me pull this out a little bit. So there's really a lot of room to go here. Really good, clean pause here. So during the week, this was actually the entry. You're going to start to see a lot of this where the market is just consolidating, and then it finally breaks out. And now 1, 2, 3, 4 strong days taking out the breakout level. We're going to look for another 2-day pause here. But my point is, you need to keep a tracking journal of one day to the next like we do, and consumer defensive is still near the top of that list. So Dollar General, Kroger finally had a nice breakout. Look at that. We've actually been watching this one since over here. Again, Wednesday, Thursday, Friday, bullish gap. ADM, we've been talking about Costco. We've been talking about Walmart. Okay, Walmart was strong again on Friday, especially when the market was selling off. Interesting one, Philip Morris. Philip Morris actually finally rallied, bullish gap, pause, bullish gap, and another higher opening. So we're looking for this one to follow through, and specifically here, bullish engulfing candle into a well-bid candlestick, completed the gap. And now if we zoom this out a little bit more, 112, down to 88. We're right around the $100 level. So we're probably going to pause here for a couple of days, and we're going to look to fill this next gap up towards 108. Okay, so that is the bulk of the consumer defensive. Maybe we might want to throw Pepsi and Dollar Tree, and a nice breakout there, and PG, Procter & Gamble. Okay, so giving you, again, you got to put this list into a watch list so that you are prepared to let your software do the walk-in for you. So the next group that we're going to take a look at is energy, breaking this down. Most of this was just from Thursday and Friday's price action. But we're going to take a look at anyway, Oxy, OXY, really good, clean, what we call energy candlestick. So you got 1, 2, 3, 4, 5, 6 weeks of green candlesticks. The last 2 weeks, bullish reversal, bullish U-turn into well bid. You got 4 melted candles sandwiching in between here, but a really good clean move on Friday. So we're looking for follow through on Oxy. Also looking for EOG, BTU. So again, we're just following the money. There's no reason to guess here. XOM, S, CCJ. Again, CCJ with a nice pause there. And we already gave you the Chevron. So again, there's no reason to guess. The smart money is doing something. We're just going to follow them. Now, we're actually going to work our way to the other side of the list on the technology and consumer cyclical, and actually hop in looking for some short sales. So we're actually going to start out on the tech side looking for some short sales. We're actually going to start out with Bitcoin, with Riot and Mara. Now, you can make a case that these are beyond the optimal entry, and you're probably right. So you got to put them into your tracking journal, especially if Bitcoin continues to trade lower. It might have some room to go. You got to push down and a pause, a push down, a gap down, and another push down. I do believe this is a little bit oversold. We like to say far enough from the optimal entry because we hate to use overbought and oversold, but the weekly chart went bearish, U-turn, well offered. Next level's down at 19 and change, so maybe another $3 down there. So again, other tech stocks setting up as bearish trades, AFRM. You know, this is an interesting one because we had a really good conversation in the community last week about whether or not, if the recession that is anticipated does hit and inflation continues to get out of control, this is the kind of stock that could find some buyers because this is the buy now, pay later type of company. So this is definitely one to keep an eye on, even though it has bearish order flow right now. Let's see, Asana. So these all have bearish order flow and opportunities. We went bearish U-turn inside week to well offered week, and now we're looking for a breakdown here as well. Coin, again, sticking with those Bitcoin related stocks. NVIDIA broke down, finally punched through the 50-period moving average, kept going down. Shopify, you get the idea, right? DDOG, so tech is hurting, but the area of tech I think that's hurting a little bit more is semiconductors. So we're actually keeping an eye on these guys, Micron, AMD, those kind of guys you want to pay attention to. And you can see AMD here specifically at a big level. If this can get through 100, it's got some room to fall. Look at that, how big that support is. Next significant level is down at 84. One sector that actually caught a bid that was on the short sale list last week with the home builders, Lennar, Toll Brothers, KBH, and then working over into the same area, we had Home Depot, which actually had a really good day. Home Depot and Lowe's had a really good day on Thursday and Friday. Just to give you an idea how strong Lowe's was on Friday. That's actually what it looked like for 2 days in a row, but that's mostly short covering because it's coming off of this really hard move to the downside. Got a bullish U-turn here, but that's a momentum reversal. So we're looking for the home builders to hit the skids again and start to move down. So we covered, the only other one that I want to talk about here is, hang on, let me just see if I can find the chart. Sentinel One. Sentinel One was the other one that I wanted to take a look at. We went inside candle breakdown on the weekly chart into well offered. And you could actually see here again, bearish gap. I love paying attention to these gaps because they usually get followed through, and you can see how much more room there is to the downside here, just below 29, somewhere in that area. And MRVL as well. So I'm giving you some ideas of longs and shorts because we got really excited about this last week, that we are now in an environment where we are seeing two-sided trading, which is very exciting, quite honestly. So now we're going to work our way up into consumer cyclicals and some more ideas on the short side of the tape. And unfortunately, a lot of these are coming from the auto manufacturers and specifically the EV type stuff. So Rivian, RIVN, Rivian. We got a bearish U-turn here on the weekly chart last week. Go well offer and pushing down near all-time lows again. You can see where the stock is here. But more importantly, bearish U-turn here, and then 1, 2, 3, 4, 5, 6 well-offered candles in a row, and then another bearish U-turn. Again, you can make a case that it's beyond the optimal entry, but we are now setting up the side of the market that we're looking for. So DKNG as well. Penn, along with DKNG. Lucid. So again, these are consumer cyclicals, not much discretionary money out there. Starbucks, same thing. Starbucks actually had a multi-day pause there. Win as well. You get the idea. Think of places where extra money will not be getting spent. There's really no other way to put it. CZR on a big breakdown as well. You can see resting right at this level here. If it takes that out, there's a lot of room to go to the downside. And also we talked about LVS. Again, same area. NEO and XPEV. So again, a breakdown right now where energy, metals, and miners are strong along with healthcare. Consumer defensive, such as Pepsi, Costco, Walmart, those guys are hanging in there. Financials are stuck kind of in the middle of nowhere. They're actually looking at a reversal of momentum. Industrial stocks, nothing to talk about. Communication services, FB, Meta Platforms, and Snap had a decent run. That one whittled away, and now we're looking at the short side of consumer cyclical and technology. So hopefully that sets you up at least to make a game plan heading into Monday. Big list. The danger of next week on these stocks on both the long and the short side, quite honestly, is that quite a few of them are beyond the optimal entry. It's kind of like we had the have and the have-nots last week, where the stocks that didn't move at all. The ones that did move very quickly in a very short period of time. So these stocks are going to be more leaning on a bullish echo, and these will be bearish echo unless you see a pause and a breakdown like we saw in Micron and AMD. All right, have an awesome, awesome day. Let's get ready for trading on Monday, April 11th. Hope you're having an awesome weekend.